Hey guys, so today we're looking at 6 of the highest paying dividend stocks in the UK, listed on the FTSE100, which is essentially the top 100 companies in the UK. Now the reason we're looking for dividend stocks on the FTSE100 is because we're looking for really big, reliable companies that are going to pay us a nice high return dividend year on year. And I believe, especially compared to the American market at the moment, the UK has a really good potential for growth. Given coronavirus calming down post-Brexit, things are starting to recover and the economy does have a solid chance. So UK dividend stocks are looking like a really great opportunity. Now it is worth mentioning there is a FTSE 250, which is the next 250 biggest companies. I'll mention some of them in an upcoming video. The reason I'm not mentioning it today is I'm looking for companies that are bigger, more stable, that aren't going to move as much. So I've just received a dividend payment of £1,600, bringing my total for the year up to £2,400, which is a monthly average of £251 completely tax-free. Here you can see my payments from Taylor Wimpey of £568, plus my payment from Aviva, which is £1,087. Now considering these companies are a small percent of my portfolio, that's a really nice return for literally no work. And it is pretty much the easiest form of passive income you can get, provided you've got the money in the first place, of course. Now while I don't particularly aim for dividends, I think it is a great time to add some more to my portfolio. When the market's really high, adding dividend paying stocks that are reliable, that'll be there for the long term, are a really great option. They can be a great way to balance your portfolio in a time of economic uncertainty. So I'm going to be adding some more of these to my portfolio. If you want to follow along and follow my journey, make sure you subscribe and stick around for those. But before we dive in, let me just mention why you might not want dividends. Now dividends are fantastic if you're looking for income, but a lot of the time they do stunt growth. And what do I mean by that? Well, dividends a lot of the time are cash that the company doesn't know what to do with, which sounds crazy, but a lot of companies are going to be reinvesting that money in order to grow the company and grow the share price. So you have to be careful that sometimes a really high dividend doesn't mean high growth stocks. And I will show you this in detail in a minute and show you an example of why I would have gone for a higher dividend, I wouldn't have got that great return. But if you can find that mix of a high growth stock with a high dividend, you've literally got the magic formula. And that's what we're trying to find. And it's worth mentioning that all of my dividend payments are tax-free because I have them all within my ISA. And if you haven't got an ISA, make sure you get one ASAP. If you're not within an ISA, you can also claim £2,000 tax-free within the dividend allowance. So do make sure you're taking advantage of that. So before I dive in, let me just mention this isn't financial advice, and I'm not a financial advisor, this is my personal opinion. And this also isn't going to be super technical. For a real technical analysis, you could spend easily 45 minutes on each share. I'm trying to keep this very beginner friendly, mention the fundamentals and what I think you should focus on, as I really want to make it accessible to everybody. Your other option, if you're not looking for individual companies, is to go for a dividend ETF. I'll have a video on those coming out shortly. And I also want to mention I have tried to keep this very diverse. I've tried to pick companies in different sectors so you can have a nice balance to your portfolio. And the other thing is these companies are quite boring. You're not going to find your Facebook, Apple and Tesla. You're going to find solid companies with great returns. So with all that being said, let's dive straight into the dividend goodness. So the first company I want to mention are Taylor Wimpey. Now I'm sure you're aware they're one of the biggest house builders in the UK. Now Taylor Wimpey are on the lower side of dividends. They only have an annual yield of 2.3%. Taylor Wimpey are at the bottom of my list, although I do think they're a really solid UK company. Their dividend yield is just 2.3%, and they do have a really nice price to earning ratio of 27. But this is a company I've held for a long time. They've got really good company values and a good team behind them. The price has been on the rise. I've actually bought in down here, which was fantastic, and I've got great returns so far. In terms of the dividends, you can see the dividends have been a little bit hit or miss, but they have been fairly decent. But in comparison to some of the others, they are quite low. But I did want to mention these because they are one I hold and I have got a great return so far. But I will show you a better option for these in a second. I wanted to show you my returns from these on top of my dividend. So actually last year my return from Taylor Wimpey was 41%, which was fantastic. I've actually made more than this. It's a little bit skewed because I've been depositing and withdrawing, but overall, they've been a fantastic hold for me. So this is just an example why a low dividend cannot be that bad. If you can get that dividend, it's a fantastic boost on top of growth. So just bear that in mind. Don't just go for a good dividend. The second company I want to mention, which are one of my favourites, is Aviva. Now Aviva are a huge insurance company in the UK and they do a range of different insurance policies. But they also are big in the financial sector, which is what a lot of people don't know. So they do have these investment portfolios. They have a stocks and shares ISA, pension, all these kind of savings accounts. So they do have a lot of different saving options. So they're a big player in the financial and insurance sector. Now in terms of their key stats, they've got a great annual yield of 5.2%. The price to earnings is really low, it's only at 8, which is just fantastic. The price has been steadily on the rise, and I do think there's still some growth to come. It's currently at 400, but I definitely think we could see this company come back up to 500 levels. In terms of their dividends, the dividends are really nice. So you can see the dividends have been 5, we've got 10, we've got 9, 4 and 5. So they've been really good on average overall. So they have been able to provide a really nice dividend over a long-term basis. Even over 10 years, you can see the lowest the dividend's been has been 3%, which is still pretty nice. So I do think Aviva are great for long-term growth, as well as providing this awesome dividend. So I'm at least going to be holding them for another 12 months, see where they get to, see if they can hit that 500, and then I might consider selling some of them off. Because I am looking for that dividend, but I also want that growth. And I just want to show you my returns from Aviva. So I've had 57%, which again is actually higher than that, and I have had these fantastic dividends that I showed you earlier. So Aviva last year have been such a fantastic play for me. Now the next company I want to mention is Persimmon Homes. Now these again are another big UK home builder. They've got over 400 locations nationwide. Now you can't go far wrong with house builders. There's always going to be that demand for new properties, so they've got that room to grow. As well as governments are always going to help house builders because they need new homes. In fact, that's why I bought Taylor Wimpey, and I would still buy UK house builders today. And if we take a look at the key stats for Persimmon, we can see the annual yield has been 6.2%. The price to earnings ratio is actually 15, which is fantastic. So looking at the stats, this is actually probably a better play than Taylor Wimpey. Of course, it's worth diving in and doing more research on the company. If we take a look at the financials, you can see their gross profit has been growing year on year. It's taken a slight dip in 2020, but overall it's pretty great. And their operating margin is 23%, which is a pretty healthy operating margin. And in terms of their price chart, they have had a quite steady increase in price. And in terms of their price, they have had quite a steady increase over the years. Yes, it's not the fantastic returns you get with something like Tesla, but it is a really solid, stable company. If we take a look at their dividends, you can see they have been quite great. So we're up to 13 and the lowest has been 4. But if we take a look at the 10-year chart, you can see the dividend has been quite healthy over the last few years. So they could definitely be a company that's worth adding to your portfolio. So the fourth company I want to mention is British American Tobacco. Now I have to admit, this is one of the highest dividend paying companies, but I'm not really a fan of tobacco companies because I'm all about that health and being as healthy as possible. But if you're not really bothered and you're looking for a good return, this could be a great company for you. Now, if we take a look at the key financials, we can see the price to earnings ratio is really low and the annual dividend yield is actually really high at 7.89%, so that is one of the highest on our lists. And in terms of the financials, I hate to say it, but their gross profit has been growing really well, and it's literally on track to almost have doubled over the past 10 years. Their operating margin is really healthy at 39% in 2020. And we take a look at the dividends, you can see the dividends are some of the highest. So over 5 years, the lowest is 4.5 and the highest is right up to 8%. Also giving 8% over the last 2 years. And over 10 years, you can see just how healthy it has been. So the dividend on this company has been really great. But this is really what you need to watch out for with looking for high dividend companies. Now all of these stats look fantastic until you look at the price. So if you look at the price over a 5-year period, you can see it has been on a steady decline right the way down. And this is coming from a growing concern of people's health. They want to be healthy and just not as many people are smoking as they did before. Now the company are moving into these reduced risk products, but whether that's going to carry them through and make them stable for the future, we just don't know. But the question is, with a company like this, are they still going to be around in 20 or 30 years' time if you plan to hold them for that long? In that case, I'm not quite sure. But I think if you want to hold something for 1 or 2 years, you could add these to your portfolio and they might not go very far for the next few years. But just be careful of the declining price when you buy these. You can have a fantastic dividend, but if the price goes down, the dividend becomes pointless. You're just trying to recoup some of your losses. Now the next company I want to mention is GSK. Now I'm sure you've heard of these. They're pretty much the biggest healthcare company in the UK. Now these focus on medicines, vaccines and healthcare products. And this company own most of the major brands you're going to see within the healthcare aisle. Your toothpaste, your mouthwash, all those sorts of products, they've got loads of those, as well as their medicines of course. And if we take a look at the financials, you've got that nice dividend yield of 6% and the price to earnings is 13, which is fantastic. Price is down, which could be good news because they could have some room to grow and recover. In terms of their financials, their gross profit has been growing over the years, and their operating margin has stayed healthy. I'm sure they've had a fantastic boost with the pandemic and all the products they would have sold. So we can expect some great earnings for this year. Now in terms of dividends, this has been one of the most stable. Over the past 5 years, the lowest has been 4.5% and the highest has been 6%. If we look over a 10-year period, you can see it's also been really stable, with the highest being right up to 8.7. So I would say that GlaxoSmithKline are probably one of the most stable companies you could buy in the UK, with some nice potential for growth bundled in. Now, last but not least is my favourite company on the list, which is Rio Tinto. And I think this is a company that does have some serious room for growth and could be a great addition to your portfolio. So these are essentially miners of natural resources. So they mine iron ore, aluminium, copper, borates, diamonds, salt, titanium dioxide and more. And they're involved in the mining, refining and sales of this material. Now if we take a look at their key statistics, we can see their dividend yield is 5.6, the price to earnings ratio is 14, which is really nice. In terms of their financials, they have been fairly steady. Their profit is about the same because they are a consistent company, but although their financials have gone down, their operating margin has increased, which is a really healthy sign. In terms of their dividends, they've been really nice. The lowest coming in at 5 and the highest being 10.69. So they have provided over the years a really fantastic dividend return. Now the reason I think these are really great to pick up, with everything going on with the economy and the market coming down, these are going to be a really safe bet to diversify your portfolio. As inflation rises, natural resources are a really great counter to that problem. So I'm definitely going to be picking up Rio and adding it to my portfolio. So that's 6 of my favourite high-paying dividend stocks in the UK. And remember guys, don't just look for a high dividend, think about where the company's going. If you're just looking for the dividend, make sure you've got a very stable company that's going to be around. I will be mentioning more of these companies soon, so make sure you stick around and take a look at which ones I'm picking up. And let me know which other areas you'd like to see. I can go over the FTSE 250, American companies, emerging markets. I'm going to cover some ETFs, so just let me know, give me some ideas and let me know what you'd like to see. And my top tips, look for a low PE ratio, look for a consistent dividend payout, look for good financials, a great team, and make sure to diversify your portfolio so you're not too stuck in one sector. I'll be doing a portfolio update soon on how I'm getting on. I have got a large cash position at the moment, so I'm going to be looking to pick up some more companies, so make sure you stick around, and I'll see you guys in the next video. Thanks.